In today's video, we will discuss about one of the most popular Flexi Cap fund, that is Parag Parikh Flexicap fund, and check its performance using real data. And by the end of the video, we shall be able to decide whether to continue our investment in this fund or should exit this fund now. We will also discuss about the effect of SEBI's current limit of $7 billion for mutual fund house for investment in overseas equity. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Parag Parikh Flexicap fund has been one of the star performance in its category, that is Flexi Cap category. Here we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 21,800 crores, which is okay for a Flexi Cap fund. Now from the graph, it is very clear that the AUM has increased from 8,200 crores to 21,800 crores. That is 2.5 times in last 1 year. In the later part of the video, we will also see the effect of this fast rising of AUM. While the expense ratio is 0.79%, that is little bit on a higher side as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty 500. If you are enjoying my video, then do like, share and subscribe to my channel. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is heavily invested in finance, services and technology. Finance and technology being a core sector and services being an evergreen sector. And quite a good performing large and mid-sized companies form a part of this sector. And when compared to its benchmark, its allocation in service sectors is on quite higher side. This can sometimes lead to performance issues when this sector does not perform well. Here I would like to add that the fund has exposure to foreign equity in tune of around 30%, whereas for comparison we are taking into consideration Indian benchmark only, which may not be a fair comparison, but unfortunately we do not have any choice. As evident, Axis Bank, ICICI Bank and HDFC Bank are the main stocks of the financial sectors, whereas overseas stocks like Alphabet, that is Google, Amazon and Facebook are the major contributors in the service sector. Microsoft and HCL form a major part of the technology sector. Here also the stock selection looks good. On checking the portfolio allocation, it is evident that the large cap shares form around 81% of the portfolio, whereas mid cap shares form other 16% of the portfolio, and only negligible 2.66% is allocated to small cap stocks. Its allocation is similar to that of a large cap fund. Flexi Cap fund has the privilege of investing across categories without any capping, but as the fund's AUM increases, it becomes more and more difficult for the fund manager to find good stocks in small and mid cap categories, and the fund's portfolio slowly turns like that of a large cap fund. This problem is with many funds as their AUM increases. This large cap fund type allocation provides a good downside protection during bad phase and also be able to generate a good return with less risk. I have discussed this downside risk protection in the later part of the video. This type of portfolio allocation is quite good and suitable for long to medium term investors. Mr. Thakkar has been managing this fund since 2013, that is from the inception of the scheme, and that too very efficiently, and hope that he continues in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's see how the funds performs on the risk parameters. Here we compare the parameters with the benchmark index and the category average. The first one, mean return, that is the average return in a year, which is 25.75, which is more than both the category average and the benchmark. Here the higher the value is better. Second, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 18.44 and is also less than both the benchmark index and the category average. Here lower the value is better. The third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.20, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth is beta, that is the volatility of the scheme compared to the benchmark, which is 0.76, which is less than both the category average. Here, lower the value is better. The fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 10.90, which is far more than the category average. Here, the higher the value is better. So, on all the risk parameters, Parag Parikh Flexicap fund performs better than the benchmark index and category average, which is a positive sign for the fund. So now let's compare the trailing and rolling returns. On comparing the trailing returns for 7 years, 5 years, 3 years, it easily beats the benchmark and category with a good margin. But when compared to 1 year trailing return, it is just able to beat its benchmark and category. From the value, it is evident that with time, the fund's performance has been going down. Generally, checking of returns of 6 months and lesser do not provide very meaningful data. But as there has been changes in the scheme in past few months, that is after 2nd of February 2022, the fund had stopped accepting new investments, and only after 15th of March, it has restarted accepting new investment, but with a condition that now on all the investments will be done in Indian market only, and no overseas investment will be done till there is a amendment in the limit of $7 billion US foreign investment limit is done. It is very evident that the fund has not been able to beat its category nor the benchmark in last 6 months period. This is not a good sign, and investors should be cautious about it. Now let's also check the rolling returns for 5 years, 3 years, 1 year and 6 months. Here also the performance of rolling returns is better than the benchmark and has been able to beat the benchmark 100% for 5 years and 3 years period. But for 1 year and 6 months, it is 80% and 72% respectively during the returns period, which also indicates that the fund's performance is going down with time. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the Sensex rose. Here the value is 95, which indicates that the fund underperformed 5% than the index during this rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 46, which indicates that the fund declined only 46% as compared to the index during the fall period. Here, lower the value is better. The upside ratio has been less than 100, which is not a good sign, but with a better downside ratio, it tries to compensate for the loss of the upside ratio. So considering both the parameters, it can be safely assumed that the performance is good. Now let's see the risk return graph. Here on x-axis we have standard deviation, whereas on y-axis we have total returns. It is very evident from the graph that the fund has better total returns value with lesser standard deviation as compared to the category average and the index, which indicates that the fund has been able to generate good returns with less volatility in both its category and index. Here, on almost all risk parameters, Parag Parikh Flexicap fund performs better than the benchmark index and category average, which is very positive sign for a fund. It has been a general perception that the SEBI restrictions will have an immediate and drastic effect on the fund. But as evident in the data, there is a minor change of less than 1% in the asset allocation of the fund. Surely, the percentage of foreign equity will be reduced over time as the fund's AUM increases, but this will not impact immediately and may take time anywhere between 6 to 18 months for this reduction in foreign equity. This effect can have a positive or a negative impact on funds performance depending on how the US markets perform. So I feel that investors should not be much worried and safely ignore to the rumors prevailing in the market about the restrictions effect. So now let's try to understand the reasons behind the underperformance of this fund since last 1 year. First, the performance of S&P 500 has been quite poor as compared to our Indian index. which could have been one of the reasons for the fund's poor performance. And the second reason I feel, as evident in the start of the video, the fund's AUM has increased from 8,200 crores to 21,800 crores, that is a rise of 13,600 crores. And it becomes difficult for any fund manager to deploy such money efficiently in a period of 1 year, which could be one of the reasons for the fund performing not good in last 1 year. So coming to the conclusion, what investors should do. First, the existing investors. If foreign equity allocation is a major criteria for investment, then wait for some more time and see whether SEBI and RBI makes any change in its policy, and also keep a watch on the performance of the fund, as the fund has not performed well in last 1 year, especially last 6 months. For new investors, they should wait till SEBI and RBI makes changes in the foreign equity limit and also explore other Flexi Cap funds. I would like to add that I have Parag Parikh Flexicap fund in my portfolio and not planning to change in near future. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now, and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you.